Hello guys, and welcome to my YouTube channel once again. So in today's video we're going to be looking at the breakout and retest strategy I've been sharing in this channel for some I think the past 2 weeks. I've been posting videos about breakout and retest, how you can actually understand when the market has successfully broken out of a zone on a particular time frame, and when the market has not successfully broken out, meaning the market is actually going to leave a fake out. All right, so those are the things we want to look at. This same strategy right here on this particular pair here, boom 1000 index, because it has happened. All right, so first of all, you're looking at what we have right here. You can see this bearish candlestick sold to this level. After selling to this particular level here, which is actually a price, the market, then the next daily candlestick, which is this particular one here, bought from that same level, got to this level here, then it retraced and closed right here, just about the same point the previous candlestick closed. Then the next day's candlestick, which opened here, tried to buy. It couldn't. You can see the rejection with the little wick at the top. Then it sold massively to the downside and still closed bearish. Now, so meaning there is a strong zone. You can see the next candlestick also sold, sorry, bought up to this it sold massively, then bought up to this level here. You can see, so we have a strong zone right here until the market was able to break with this candlestick and close above. So we can easily mark this zone out with a rectangle. We can easily mark the I want to show you something. All right, now see, you can see that the market nicely, this candlestick broke and closed above this zone. Generally, if you trade break and retest by just waiting for the market to break the zone and retest, then you enter a buy. It is very wrong. It will be very wrong, and would I say you will be losing so much money by trying to trade that on this particular pair at this point. You can see after it closed, the market bought it, then came back and closed below this zone. It came back and closed below this zone. So this would have been a loss to you depending on where your TP would have been. But it's risky. All right, so you can see after the bearish candlestick closed below this zone, which completely invalidated the buy opportunity you would have taken from this breakout. All right, and you can see the market continued selling massively. The current this candlestick has been selling massively down here. All right, so what I'm trying to say here is this: first of all, what is making the market to continue selling is the structure. The market is actually bearish. So this particular breakout was not a real breakout. It was actually a fake out, because it bought and still came back to close below this zone. If the market had closed, if this bearish candlestick had closed on this zone, then there would have been a chance that the market wants to buy. It means the bulls are stronger. They did not give the bears enough opportunity to continue this. So the bulls are in charge. Then they would buy the market up to whatever level they will take. But the market will travel further than what we have here, or possibly change in direction would have occurred totally. All right, but for the fact that this bearish candlestick closes down here, then indicates the market will sell. It might even sell back to this level here, then starts buying. But during this period, if you're able to find this opportunity for these sales, then you'd make so much profit. Because if you go down to, let's say, the 15 minutes time frame, let me show you something. The 15 minutes time frame. All right, so on the 15 minutes time frame, you can see, okay, let's show the 4 hourly time frame. Let's see the 4 hourly time frame. You can see how the market closed below here on the 4 hourly time frame, giving a bearish engulfing candlestick pattern. So this also confirms the strategy, or confirms that the breakout at this point was not a good one to consider taking some buys. Then you can see that after the bearish candlestick, the market sold nicely. There was a little pullback, then the market sold, creating lower highs and lower lows up to where it is now. All right, where I actually saw this market was it was on the 15 minutes time frame, somewhere around here. All right, so I noticed the market was creating, the market actually created this double top here before it started moving. I saw it somewhere around here, so I just knew the market would pull back and continue. But since I was not interested in trading any pay today, so I've been just looking at it, then decided to create this video so you can learn from it too. All right, if you look at this, and there's something else I wanted to mention in this video, but I don't want the video to be too long, so for that reason, let's just leave it at that point. I want to talk about the double bottom, or the double top and the double bottom, but not in this video. There's something very important you will learn from it. Maybe in my next video I'll talk about it. So you can see the sales that happened here. Just go to the daily time frame. Just with the minimum lot size, you trust me, you would have made something reasonable with this particular movement here. Let's say you are able to taking the entry right from where the new candle started. You see, your profit target, your profit should be about $35 now. Then let's just say there's nothing to let's say at all, because that's just the profit there. Then because if I wanted to take this trade, then my TP would have been somewhere around here, or considering where I actually saw the opportunity, maybe the 15 minutes time frame, then I saw the opportunity around this place. I saw it around here, around this spot. Then this would have been, it would have still made about $25 or 26 or $27 in profit with the minimum lot size. So these are the kind of trade setups you need to, catch big moves, and then you'll be happy. There's another one that happened on let's go to the daily time frame on VIX 50, volatility 50 index. All right, so now look at this. You see the market has been consolidating around this level here. I'm just trying to be fast so that I won't waste time. All right, you can see what we have here. You can see the rejections, guys. You can see the rejections. Now if you go down to the 4-hourly time frame, you'll still see these rejections. All right, you can see yeah, let me call it rejections. The market is always rejecting that zone. We've been having some sales from here. Market sold here, sold here, sold here, still the same zone, sold, and finally it broke above it. All right, so now when you look at the zone like this, you don't just take a trade after a breakout. You don't just take a trade after a breakout. Now you're sitting on the 4-hourly time frame, and you may feel once there is a breakout, then you should take a buy. Then when you take the buy, you see the market buys a little, then still comes down. That is because the market, the actual time frame that has that zone or that consolidation is not this particular time frame. All right, so you can see the market did what? It broke out, then still came down to sell. Then if you go down, let's go to the daily time frame. You will see the daily candlestick actually broke and closed above this zone. The daily candlestick actually broke and closed above this zone. Then the next candlestick did what? You see it closed below. Now the thing is this, on boom 1000 index, you can see the current candlestick is selling massively, but this one is not selling massively. You'll be wondering why. It's supposed to sell like what happened on the other pair, but you should also take note of what is happening here. All right, you can see there's a very strong bullish structure here, so the market would want to respect it. You can put the trend line or put some trend lines to see that that's a channel the market is trying to form, a bullish channel right here. This is a bullish channel right here the market is trying to form. Then we have this let me just put it, thing here is okay, good. Then if we go down to the 4-hourly time frame, I just before we go down to the 4-hourly time frame, let me show you something, guys. You see this, if you go, this is the daily time frame. You cannot confirm a breakout from this zone on this daily time frame. Check the weekly time frame. This is the time frame that has this consolidation until the market breaks and closes above this zone on the weekly time frame before we consider then it retests, it closes above this zone, and then the next candlestick closes above this zone. Bearish candlestick closes above this zone. I don't know if I'm confusing you. This is what I mean. If we have a bullish candlestick closing above this zone, and then we have another candlestick bearish still on the weekly time frame that closes on this zone bearish, then that is when we can confirm, okay, the market is ready to buy. If the bearish candlestick closes below this zone, then the market will continue selling. All right, so you see the market will buy nicely. Else, any breakout you see on a lower time frame, try to compare it on this weekly time frame to be sure there is an actual breakout. You see the market has been creating series of lower highs and lower lows, so if the breakout is confirmed on this daily time frame, on this weekly time frame, they will be having some massive buys, because the market will have a very long way to go. See this, the market will have a very long way to go. All right, so until that is confirmed, you can't actually say, okay, the market, there is a breakout. So let's go to the 4-hourly time frame. Now look at the 4-hourly time frame. Look at the structure we marked here. This is the structure we marked here. This I think this is like a channel or so, or know what they call it. And you can see the market is creating higher highs and higher lows. So what the market is doing is actually reacting to this zone here. Then it will possibly continue buying, but we have a consolidation at this point. There's a consolidation right here. At this point, you can see the 4 candlesticks have been finding it difficult to buy above that zone. So if the market is able to nicely break and close above that zone, then it continues buying. Then we'll be expecting the market to do what? To buy maybe to the next to do another touch, then continue like that. Then before we know, we might have a breakout on the weekly time frame. But while this is still happening, just understand that the market can just be buying and selling within this channel until we have a final breakout on the weekly time frame. But to be very sure the market has successfully broken out and will be buying for a long time, very long time, then you have to compare it on the weekly time frame to be sure. Else just pick what you can while the market is within this pattern here and make your profit. All right, so as you can see, if the market, let's show the 1 hourly time frame, you can see the consolidations there. So the market can just break out of this zone, comes back to retest with a candlestick, bearish candlestick, we would see some massive buys. And besides, you can also see this particular channel pattern the market has created here on this 1 hourly time frame. There's another pattern here that indicates a market continuation, a bullish continuation of the market. All right, I can just duplicate this line and place it right here. All right, so you can see there's a very high chance the market will be buying massively once it's able to break out of this. So if it breaks out of this zone, you just find an opportunity, take your entry, and allow the market to give you the profit you want, guys. But don't be greedy, guys. Don't be greedy. Then you make the profit that you want. You'll be happy, guys. This is a whole lot. You just need to practice what you've just seen in this video. Go through your charts, go to the higher time frames, compare candlesticks movements, compare, identify high probability zones, identify the zones, then look at the candlestick patterns, the chart patterns the market is creating, then do proper analysis before you think of taking any trade. If you do not understand any concept, do not be in a hurry. Just go over the video go to the video over and over again. You will master it. But if you want to understand it even faster, then you need to reach out to me for a private mentorship. I strongly advise that the link to reach out to me is on my Telegram channel. But if you click on the description of this video, you'll find the link to the Telegram channel. From there, you reach out to me. Also, the July mentorship batch will be coming up very soon. All right, more information about the July mentorship batch will be posted in the Telegram channel, so do well to be on the channel and get alert. For those of you who will be interested in the group mentorship, then like this video, subscribe to this channel, and then share your thoughts in the comment section. I'll see you guys in my next video. Stay blessed. Peace out.